Here is the uncomfortable chart nobody on crypto Twitter wants to show you right now. Recession indicators that were green just 6 months ago are flipping yellow one by one, and the BTC to ETH correlation, the one constant traders have leaned on for years, is finally cracking. Welcome back to altcoin Daily. Let us walk through the late 2026 macro picture and the crypto crash scenario that follows from it. Start with the macro. The Conference Board leading economic index has now printed negative year-over-year for several months. US manufacturing PMI is back under 50, and the unemployment rate has ticked up enough that the SOM rule trigger is uncomfortably close. None of these alone scream recession, but together they are the textbook yellow light. Add a yield curve that just reinverted after briefly normalizing, and you have a macro cocktail that historically front-runs equity drawdowns by 2 to 4 quarters. Now overlay crypto. For most of this cycle, Bitcoin and Ethereum moved like twins, 90-day correlation pinned above 0.8. In the last few weeks, that correlation has slipped towards 0.5. Bitcoin is being treated more like a macro asset, sensitive to real yields and the dollar, while Ethereum is trading on its own gravity, staking flows, layer 2 activity, and ETF rotation. That divergence matters, because in a real risk-off event, the two assets behave very differently. Here is the crash scenario. If the S&P rolls over 5 to 8% on weak earnings or a credit event, history says Bitcoin draws down roughly 1.5 to 2 times the equity move in the first leg. That would put BTC retesting prior breakout zones. Ethereum, with its higher beta to altcoin liquidity, could see a sharper percentage drop, and the long tail of altcoins, the small caps, would get hit hardest as liquidity drains from the order book. The nuance is what happens after. In past cycles, once the Fed pivots and liquidity returns, Bitcoin tends to bottom before equities and lead the next leg up. Ethereum and quality large-cap alts follow, and only then do speculative names recover. So this is not a perma-bear take, it is a roadmap. Watch the BTC ETH correlation, watch credit spreads, and watch the dollar index. If all three move together against risk, that is your signal to tighten stops and raise cash, not to average down blindly. If this breakdown helped you think clearer about the next few months, hit subscribe so tomorrow's altcoin update lands in your feed.